We've got lots lined up over the next half hour and three very special guests who will be joining in on the show. We'll have Mark Faber, publisher Gloom, Boom and Doom Report. Also joining in on the show is Manish Sontalia, VP and Fund Manager at Motilal Oswal Asset Management. And Sandeep Wagle, Founder and Managing Director at Aptar Technical Advisory Services, will also be with us.
What's your call on emerging markets, Dr. Faber, in general, and Indian markets in particular? Because after the Cyprus bailout concerns have been looming on emerging markets, they've fell quite a lot.
Well, basically, I think emerging markets have to be looked at in a segregated way. Some have performed very well this year and last year, like the Philippines, Indonesia, Thailand, and also India performed well last year. And others have performed miserably, like China and Vietnam. And so we have to look at each emerging market separately. I don't think that Cyprus has a large impact on emerging markets, but we have to see markets in general are overbought. And any news, no matter how irrelevant it is, will have an impact and lead to a correction or even a sharp decline.
Dr. Faber, hold that thought. We'll come to you in just a short while, but Manish wanted to bring it to you with the fundamentals of the equity markets, because it seems like there's a confluence of factors, be it the hawkish RBI stance, the kind of political damage that we've seen, and now with the earnings season approaching, do you think at these levels it would be a good buying opportunity into the equity markets?
Yeah, the factors which you talked about are known, I think besides the political equation which has changed, I think other factors have been by and large known. But in spite of hawkish statement by RBI, I think most on the street expect another 50 basis point cut in repo over the course of 2013, calendar year. So I think it is a question about very tight liquidity conditions in the market, which is causing, certain stocks, particularly those with high leverage, to fall much below their fundamental valuations. I think things would improve once we move into the new fiscal, from 1st of April. I think you'll see some of the carnage that you are actually witnessing currently getting reversed post the expiry that we have on the 28th of this month.
Sandeep, what according to you is happening on the charts of the Nifty? Because even on a closing basis, we couldn't hang on to the 5700 mark. How do you see Nifty going from here on? Do you see additional pressure when markets open tomorrow, depending on global cues? Will people would be looking for opportunity to short Nifty on every rise?
Well, over the past few days or possibly a week or two, we have been witnessing a lot of selling at every point, at every high, at every up move that has happened in the markets, and the reasons have followed later, Ajay. Well, in the last move from 5900, we are sub 5700, so a bounce back can't be ruled out, but I suspect that the bounce back will not go beyond 5760, 5780, a 50-70 point bounce back, 1.5% would be sold into, and I think it would be a matter of time where we will take out the prior swing low of 5660. I'm talking of the cash Nifty levels, and 5550, 5600, that is the level I am looking at the Nifty testing over the next week or so, say 4 or 5 to 6 trading sessions, and probably there we may witness some kind of a bottoming out formation and then moving back to 57. So 5550 to 5750 is the range I am mapping the Nifty at over the next couple of weeks.
Manish, how convinced were you after listening in for some clarifications from the top ministers in Congress, Kamal Nath, Manish Tiwari, and even the finance minister, about the stability of this government? And also, it looks like it has crept inside the sentiment that government is on a shaky wicket right now.
See, markets in the extreme short term are more about perception than reality. However, the body language of the government seems to be quite confident. They have maintained that Parliament is in session, and you don't have a no confidence motion bill which has come to the Parliament just yet, and it is getting a Jones Sinadai on 22nd of this month. So I think the government has done its numbers, even though the margins of a majority are quite thin, but they don't seem to be too ruffled about the whole situation. So I think market have their own perception. Maybe it will get corrected as we move ahead, ahead of 22nd of March. Maybe things would start sinking again that maybe the parliament is not in danger just yet.
Dr. Fava, I want to pose a similar question to you, given that Manish also said that the body language of the government seems to be fairly positive. They have reiterated that reforms will continue. Do you think that India can get back to the 6 to 7% growth rates thanks to this?
I think the Indian economy will grow long-term more modestly than was expected. I think if India can grow trend line at 5 to 6%, that is probably about it of growth in India. Now, can there be years when it only grows at 3%, or where there is no growth at all, or can there be years when it grows at 7%? Yeah, it's possible. But long term, I think that the Indian economy, by the way, also China, will slow down.
Manish, how are you looking at the fundamentals of the market? By when do you see the market will start talking about the fourth quarter numbers?
I think markets are to a very large extent starting to build in Q4 numbers. So, islands of strength which you're seeing in the markets currently are at, in the sectors like IT, pharma, consumer staples. These are the three pillars of strength in the current markets. And I think these are the three sectors which are going to report good numbers. The other sectors which are getting beaten down, particularly the metals, the construction, the infras, will have problems of execution, will have problems of interest costs and depreciation coming in the P&L. So I think markets are not looking in at anything more than 4 to 5% sort of a growth for quarter four, if not worse than that, because we are looking in at 4.6 or 4.5% of GDP for the fourth quarter, giving it 5% for the full year fiscal 2013. I think it's more about fiscal 14 numbers which is going to matter. And we believe that things would have troughed in the fourth quarter, and starting to look up for fiscal 2014, closer to around 5.7 to 6% of GDP growth, which should actually trickle down into profit growth for corporates, also moving up somewhere closer to 10 to 12% for fiscal 2014. So valuations have corrected, price P de-rating has happened due to a lot of extraneous factors. Can we go down further? Maybe you can in the short term, but I think valuations remain extremely competitive.
Sandeep, would you attribute the sell-off in the ADAG pack today to the way the market sentiment generally was, and how do you expect these counters are likely to pan out come tomorrow?
Well, Aman, these stocks normally go up and fall also in the same way. They go up, they have a much higher beta is what I would say. And yes, if the market were to bounce back, I don't think they'll bounce back that much. But the patterns that some of the stocks have made, talk of a Reliance Infra, talk of a Reliance Capital, suggest some more downside to the tune of around 8-10%. So a little bit of an upside in case the Nifty goes up. I think this is an opportunity to go short or sell these stocks.
Sandeep, out of the worst performing from the large caps today, stocks like SBI, ICICI dipped below the 1,000 mark. Larsen, of course, ADAG group fell sharply. If global markets are supportive next day or tomorrow morning, looking at the total volume, which has been just near 2 lakh crore, do you think there is a case for a bounce back? And if yes, which one would be a better one to ride a bounce back on?
Well, a bounce back is always possible in any market scenario, and especially with the international markets outperforming on the upside. So, yes, there will be bounce backs, but I don't really think the bounce back will be witnessed in the ADAG space or maybe even in the banking space for that matter. Probably some pharma stocks may bounce back. Talk of a Hind Unilever, which is closed at or near the high of the day. That could be a good bounce back candidate if one wants to play for that. So one has to look for defensive stocks or some such kind of stocks which have not participated in the fall in this last 2 or 3 days. So such kind of stocks, talk of a Hind Unilever, talk of a Cipla, talk of some of the other stocks in the pharma space, they may bounce back.
Dr. Fava, if we view the economy from an overall perspective, the recent cut that we saw in the repo rates from the Reserve Bank of India, do you think that can actually help in kickstarting the economy?
Well, basically, what lower interest rates in India might do is weaken the rupee. And obviously then if the rupee weakens, we might have some inflationary pressures. I think like in other countries, in India, the rate of inflation is vastly understated. So in real terms, probably economic growth is rather slow.
Manish, as a house, you also keenly track a lot of good quality mid caps. From the earnings point of view, especially at a time when mid caps are being crushed badly, tell us some names where you are bullish on as a house call, which investors could look at picking up at times of bad cuts in the market.
I think the current market situation warrants that leveraged companies be completely ignored, irrespective of balance sheet side valuation, which are extremely comfortable. I think focusing on earnings growth, it remains concentrated on the banks. So on the mid cap side, City Union Bank looks good, and ING Vyasia looks good. On consumer staples, Imami looks good, Glaxo Consumer Healthcare looks good, Pidilite looks good. I think in case of pharma, we like your Ipca quite a bit. Even Wockhardt is quite decent in terms of earnings growth. These are some of the names that we are concentrating on, and we have them in our portfolio.
Sandeep, what's your call on the bank Nifty? It did not really fall a whole lot, but around less than a 200 point, less than yesterday also.
Well, I think the fall has started in the last 2 days from 11,800. The bank Nifty has almost come down to 11,200. I'm talking of the cash levels. That's almost a 6% fall. And I think we will see levels of 10,800, 10,850, somewhere around that. So I would be talking of another 3 or 4% downside. Yes, probably a 100, 200 point upside is possible on a bounce back, and that should be used to sell it rather than going long.